Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of December 12th through December 16th, where we'll discuss what poked the bear market this week. So we were talking and thinking that the bear market might be in hibernation, and something or somebody obviously poked the bear market and knocked it out of hibernation, and then we had a pretty red bloody week this week. So again, we'll talk about this: what poked the bear market, and do we expect the bear market to go back into hibernation, or do we expect it to rage on for the unforeseeable future? So thank you all who joining us in the live chat for the live stream today. The Blind Trader, welcome. SRP X, Speculation, DS Greg, Tony Roses, Ollie in the Bay. Glad to see you all. Thank you again for joining us. So let's dive into our part one of our weekly trading game plan for the trading week of December 12th through December 16th. We'll do our market analysis, do our week in review, and then we'll discuss strategies for how we can make money trading, whether this is a bear market or a bull market or a volatile market. And also we'll be preparing for the CPI data and then the imminent Fed interest rate decision coming up on the 13th and 14th. So here's our notes for our week, part one of our weekly trading game plan for this week. This is a Google document. It's publicly accessible. You should be able to find the link to this Google document in the description box below. We store these Google documents in a publicly accessible Google Drive folder. And again, you should be able to find the link to this Google Drive folder that contains the documents for all our weekly trading game plans. So you can reference any bonus videos that we may mention, all the tools and resources that we use for our weekly trading game plans. So we'll start out with a couple bonus videos and some reminders of some videos we have under construction that will feed into our strategies towards the end of the video. So again, stick around to the end of the video. We'll be talking about our strategies for how to make money trading. Again, if this is a bear market, bull market, whatever, our philosophy is we can make money. There's plenty of ways to make money in any market. So welcome also Ricky Khan. Glad to see you as well. Got a good crew joining us for our game plan today. Great to see all our fellow BeachBum traders. So again, as a bonus video, you can find a link to this video. It's currently unlisted on how to make money trading in December. And again, we'll talk about this more in our strategy section. Also, just a reminder and FYI, we currently have videos under construction and coming soon on topics on what is tax loss harvesting and how does it work, the wash sale rule for beginners and the Santa Claus rally, is it real? And again, when we get to our strategies, we'll talk about tax loss selling, tax loss harvesting, the wash sale rule, how that applies to our strategies. But these upcoming videos will explain in more detail what exactly those terms mean and some other tips on how to trade them. So we won't go into detail now. So if you're not already subscribed to our BeachBum Trading YouTube channel, we'd highly recommend that you subscribe, hit the bell notify icon, and when these videos get released, you will be notified and have access to those. So just a quick FYI, those are coming soon. We're working on all of those videos to define what all that means that we'll be talking about for probably the rest of the month. So let's jump into our market analysis. We'll jump over to FinBiz, the homepage of FinBiz. We see the markets, it took a dive about 3 o'clock. It was a little after 3 yesterday. All three indices took a dump towards the end of the day. If I had to speculate, I would think this is a risk-off move going into the Fed interest rate decision next week. So a lot of people taking risk off. Again, we'll talk about potential tax loss harvesting, but the fact that this dumped in the last hour of the market, I think people were risk off going into the Fed interest rate decision, and we'll talk about a little of what we expect next week in those regards as well. We can see Friday, many more new lows, many more decliners and advancers. We've still got a majority above their 50 period moving average, but the majority is still below their 200-day moving average, and we got a bearish signal. So somebody poked the bear and woke it up from hibernation. We were definitely in a bear market last week. We can see most things were red: Disney, Meta, Tesla, a few green spots, but the vast majority of the market was red. See some of the news. Here's somebody saying they don't count on a Santa Claus rally this year. We'll see. We'll talk about what does that mean again in that bonus video that's coming up soon. Bumpy China reopening, and then FTX stuff. Oil also had a pretty volatile week. It went to a low since I think 2020. Bounced off of 70. Looks like it bounced up a little bit, but again, it bounced off of 70, so very low. Natural gas popped up a little bit. Again, it's been oscillating, as we'll see, between 5 and low or high 5s and 7 recently. Gold broke and held support at 1800. And again, when we get to the futures, we'll see how gold and silver are running, and we see all the indices were in decline. We also see that pop in the bond yields that we were kind of been expecting for a while. And again, we'll talk about what we expect in terms of bond yields and bond prices based on the interest rate decision. Dollar was choppy, so the euro to dollar, it's still above parity, but it declined later Friday. Something going on with the pound too. It took a dump and then recovered a little bit. Again, we'll see that all again in the futures. So we'll look at each of the indices real quick. Look at the SPY. So again, we see it was approaching this resistance level, a downward sloping channel. It didn't quite reach that. Last time it touched that trend line of the the resistance level of that channel, it got rejected, bounced down to the bottom of the channel, bounced up. So you can see we're pretty much bouncing between those trend lines in that channel. We see it kind of is oscillating around its 50 period moving average. I guess that's the 20 period, that's the 50. So it's above the 50, oscillating around the 20. We'll zoom out to the weekly. So again, we can see that 50, that 20 period moving average is providing support. The 50 period is providing resistance. It's pretty much chopping between those moving averages. See, it got rejected off the 50 period and bounced down. It's risking breaking down below that 20 period, and if so, we can see we've been in a bear market pretty much all year, making lower lows, making lower highs. This high again was a lower high. All these are indications that we're still in a bear market, and somebody poked the bear. We took a dive on the downside. So look at the Qs. Pretty much the same, although it's quite a bit below its 50 period moving average. Got rejected off the 20 period moving average. Again, it's still in a bear market, making significantly lower lows. So, unless something changes, we could expect a lower low. It's making lower highs. I mean, we could expect a lower low. Look at the Dow, DIA. Now, the Dow had broken out above its 50 period moving average, and was risking, trying to go into a bull market. It was at some point, I guess, 20% above its low. So technically, it was out of the bear market into a bull market, but it's rolling over as well. So it may, re-enter a bull market or a bear market phase as well. So let's look at the Russell IWM. A lot like the SPY, got rejected off that 50 period moving average, got hit pretty hard last week, broke down below the 20 period. Again, it had looked like it was stabilizing and oscillating more so, but again, on a decline now. Look at the VIX. We'll talk quite a bit about volatility in the VIX. I was a little bit surprised at this decline. The whoever poked the bear market, I was a little surprised at that occurrence this week. And we'll talk about why potentially what might have poked the bear market, who might have poked the bear market, why did we see this decline this week rather than last week, and then we also saw this increase in volatility corresponding to the decrease in the SPY. And we'll talk about, what do we expect in terms of volatility next week, again, both when we get to the futures and in our strategy section. So I hope that all helps. Just a quick reminder, nothing in our videos is considered financial advice. We're not financial advisors. This is all for education and entertainment purposes only. So the same is true of all of our videos. We're just hoping that this information will help our fellow BeachBum traders make money trading no matter what the market holds for us. So, okay, we'll look at sectors, the industries, etc. And last week we talked a lot about different ways to play sector rotation, ways to find the money flow between the sectors, etc. So I won't reiterate that too much. We're continuing to see the same type of trend. However, though, both rotations of money in and out of sectors, as well as in and out of the industries within a particular sector. And again, there's plenty of ways to make money in these sector and industry rotations. Again, Friday was mostly red. You can see energy got hit the hardest, healthcare, financials recovered again because bond yields are going up. The expectation for higher interest rates is going up again. Utilities did pretty well again, very defensive on Friday. Technology, kind of in the middle, but it got hit pretty good. For the week, again, energy, a lot of money flow out of energy. Again, the oil declined to 70. Technology, you see financials for the week were down and then recovered on Friday. Although for the month, technology, basic materials, again, they keep trying to run technology. And again, we'll talk about potential reactions to both the CPI data and the interest rate hike from the Fed in terms of, what sectors we think might run either way. Again, energy is the major negative so far. So take a quick look at the industries from Friday. Not a lot of green, some metal and mining. We'll see gold and silver outperform. Some REITs did okay. The big negatives, again, we've talked about this sector rotation in and out of aluminum. They'll run it and then it'll be declined. Same thing with coal, oil and gas, silver. I'm surprised silver is showing down here because the futures are actually showing up, and we'll see that as well. Uranium's down. I was looking for potential opportunities in uranium, but I didn't see anything that's really at a support level where we'd be looking at buying uranium right now. So just a quick reminder too, if you come back same time, 10 a.m. Eastern tomorrow, we'll apply all this market analysis, etc., to select our top stocks for our swing trading watch list for next week. So for the week, again, not a whole lot of positives. The big negatives, again, coal, uranium, aluminum, oil, Silver, solar, again, we've talked about them running solar up and down. So on any given day, you might see solar at the top or solar at the bottom. Seems to be a pretty common sector rotation lately. So welcome also, Walter Lyons. Glad to see you. Hope you're doing well. Flip of the Shippa, glad to see you also. Thank you all for joining us. So again, just a quick reminder. Again, there's plenty of opportunities. Again, we talked in more detail in last week's weekly trading game plan about how also to look at the charts in these and find ETFs in these areas or individual stocks to play the sector rotation. Again, you can make money trading short-term, day trading, momentum trading, etc., following these sector rotations, and there's plenty of ways to make money doing so. So let me open up the economic data calendar and grab a drink a sec, and then we'll talk about the economic data from last week and then also the upcoming economic data for next week. Okay, so just a quick reminder too is you can also find the economic data as it comes out. I try to grab it off the investing.com site and post it in the Surf the Market Reports channel in our Discord, and I'll show you that in just a moment. But I also wanted to point out that thanks to Spacula, he also turned us on to being able to get news reports from the MarketWatch Economy Twitter account using this tweet shift bot, and so now you'll also see that news gets automatically posted in our Surf the Markets channel as well. So thank you again, Spacula, for turning us on to that tweet shift bot. As you'll see again in the Surf the Markets report, as this data comes out, we now get automated postings in the Surf the Markets channel in our Discord that post the news relative to a lot of the economic data. And I find that very helpful, and hopefully you do as well. And again, you can see as the economic data comes out, I do still try to snip the important economic data and post it in our Surf the Markets report channel in our Discord. You can find a link to our Discord. It's free to join. There's an invite in the description box below, and I will try to throw that up in the banner as well. So again, hopefully these news articles, you'll find them helpful as well. It gives an interpretation, talks about, consumer sentiment on Friday improved, etc. Inflation worries ease. So good interpretation of that data. So I'll just spin through. I didn't have a whole lot of highlights from earlier in the week until we got to Thursday, where we got jobless claims data. You'll see continuing jobless claims is higher than expected. Initial was pretty much in line with the forecast, but it is going up a little bit. 4-week average is up a little bit. And then we also saw negative natural gas storage, but it was less than expected. And we did see a pop in natural gas prices on Friday. And then we got PPI data, and this is one of the factors we'll talk about in our strategies. One of the things that might have poked the bear is the PPI data, which is the Producer Price Index. Inflation data came out on Friday, and it was hotter than expected, and that again may have contributed to the severe decline we saw late on Friday. Again, it was twice the core, which is really what the Fed's going to pay more attention to. was twice as bad as expected. So again, contributing to the belief that the Fed could be more hawkish. So again, it was 0.75 basis point raise would not be unexpected. So anywhere between zero point 0.5 and 0.75, I think either should be expected at this point. Consumer sentiment is a little bit better than expected. It's still pretty low, but it's improving a little bit. You can see their inflation expectations is dropping a little bit, so that's a little bit positive. Wholesale inventories were down a little bit, so people trimming their inventories a little bit. So that's probably not a bad thing. Look at other economic data from the week. See if we see anything else. Factory orders was positive. So the economy in general is pretty resilient. We don't see a major increase in unemployment. It's slowly ticking up a little bit, but mortgage rates declined a little bit. Labor costs were better than expected. So again, that says that's inflation, wage inflation. Oil inventories dropped a little bit, but not significantly. And we talked about jobless claims and core PPI. So let's talk about the calendar for next week. So next week's a pretty significant. We got two significant events. Monday's, not real exciting. Tuesday, we've got core CPI. So that is the primary inflationary indicator that the Fed looks at. And although it's coming out right before their meeting, if this comes out hotter than expected, you can see the expectation is for core CPI to go down slightly. Still, pretty high. Year-on-year CPI still high, over 7% inflation. But if this comes out hotter than expectations, I think the market's going to react very negatively because it says the Fed's going to have to be even more hawkish, raise rates more aggressively to kill inflation, and that is their primary objective, is to kill inflation now. So welcome also Ellen Krentz. Glad to see you. Nug M. Thank you for joining us. Glad to see you all also joining us. And thank you, Specula, for your support of your fellow BeachBum trader, Walter Lyons. Send hugs to Walter. Thank you. So then we've got standard data pretty much on Wednesday. And then at 2 p.m. on Wednesday, we get the FOMC decision. So they'll come out with their statement as to their interest rate decision at 2 o'clock. And then Powell will come out at 2:30 and do his press conference. And again, you could see the interest rate projection. The expectations is they will go to 4.6. So again, we'll see. It'll either be a 50 basis point or 100 basis point increase. It's at 4.6. So again, I think it's oscillating between a 50 and a 75 basis point. I would not be at all surprised that inflation would still be hotter than expected, and they would go 75. That would be, again, not financial advice. I'm just speculating, guessing. We've been talking. It's not really that significant. Bottom line is interest rates are going up. Whether it's 50 basis points or 75 basis points. In terms of longer term projections, I've heard anything between in the 5% to, I guess Larry Summers on Bloomberg Business Week was talking a 6% peak rate. So interest rates are going up, whether it's in the 5% to anywhere as high as 6% is the current projection. So we want to plan accordingly and position our portfolios for increasing interest rates somewhere, in the 5 to 6% rate, and continuing high inflation, even if it abates slightly in the nearer term. So I hope that all helps. And Thursday and Friday will be pretty less eventful given the data, the CPI and the Fed interest rate decision. But we get our standard data on some jobs, jobless claims, oil and natural gas inventory. So again, Tuesday, Wednesday will be the highly volatile days with CPI and the Fed interest rate decision. So again, Tuesday we get the CPI and we get the FOMC meeting. Just an FYI, the next FOMC meeting after this week is not until the end of January, beginning of February. So we'll have, that 6-week window between the two interest rate decisions. So this will be the last for the year. So again, we'll see what they did come out with. And again, that starts at 2 p.m. when they'll come out with their decision, and then at 2:30, Powell will come out and get into his press conference. Now, I expect, I'll just throw this out now, I expect people to be pretty much on a wait and see mode. So Monday is probably going to be pretty wait and see. I don't expect there might be some positioning in ahead of the CPI and the rate decision. You might see some people again buying, calls in the VIX, UVXY. We'll talk about that more detail tomorrow. Is positioning and volatility ahead of both the CPI and interest rate decisions. We'll also talk. You might see some risk off, people taking risk off ahead of those events. But again, I don't expect a lot of volume, a lot of movement, other than those types of behaviors until we get those events. So it may be, pretty boring Monday, early Tuesday till we get that data. Then the rest of the week will be pretty exciting because we have those two events, CPI, Fed interest rate decisions, and then also Friday is the December options expiration, and it's what they call a quadruple witching day, where all the options, the weekly, monthly options, and the weekly, monthly futures also expire all on the same day. I left a link to the definition of what a quadruple witching is in Investopedia, so you can reference that. It also tells you, what months have quad witching dates in it, so you can use that reference in our notes. So let me put this in the upcoming events as well. So we've got the December, we've got the January. We can look at earnings. We should be winding down on earnings. We've got Oracle. Let's see, next week. So yeah, we've got Oracle. So we've got some software, other software. We've got some uranium. So that might impact those industries. Some gold. So again, you can reference this as the full detail calendar in investing.com, and I'll show you the abbreviated calendar in Webull in a second as well. We've got Adobe. So again, quite a bit of software, enterprise software. So again, keep an eye on those. If it's a stock you're looking to buy or somebody in the same sector as one you own, looking to buy, etc. Okay. So let me jump over to Webull. Let me grab a drink, check the chat, see if I'm missing anything. So Flippa says Monday might be choppy, de-risking. So yeah, that very well could be. And Mondays tend to be a little increase in volatility as well. And I don't disagree. I think you may see people taking risk off ahead of the CPI data. So it might be choppy, might be low volume. We'll see. And again, we can react and make money no matter which way it goes, right? Okay, so I'll jump over to the market screen in Webull. Just a quick reminder, Webull's still offering 12 free stocks when you open and fund a new account. As you'll see, we use Webull for our market analysis, for a lot of our due diligence, for the majority of our trading. I know a lot of you probably already have Webull accounts, but anybody else who's new to Webull, you can open a free open an account, get 2 free stocks just for opening an account, valued up to $300 each. And then if you deposit any amount, even a penny, you can get up to 10 more free stocks worth up to $3,000. So again, Webull is our favorite trading platform. We really like the 4 a.m. to 8 p.m. trading hours, and we find some potential opportunities to take advantage of gap up, gap down at that 4 a.m. time frame, rebalancing of ETFs again. So if you're not already using Webull, we like it. It's our preferred trading platform. Why not get your 12 free stocks? And if you don't like it, you can cash them out and take the money and go wherever you'd like. So hope that helps. So this is the market screen and the online browser version of Webull. We primarily use the online browser version, the desktop version. I know some of our other BeachBum traders use the mobile app as well. We don't currently use that much, but it also has community discussions that some of our fellow traders enjoy. So we can see Friday we had a majority of decliners, but the declines were relatively small with a long tail. Advancers was pretty small, and again a longer tail. Net inflow, we see the NASDAQ actually outperformed the NYSE this week. The past couple weeks we've seen the NASDAQ underperform the NYSE, so that switched this week, although they both ended up pretty much in the same place. So in terms of, as I mentioned, there's a shorter term, nearer term earnings calendar in the market screen in Webull. If you just hit calendar earnings, you can see what's upcoming in the near term. Find that pretty useful. And then after market close, AMC, before market open. It's also got the estimates. So I find that pretty useful. Now we'll look at the best performing industries and ETFs for the week. So we see paper was pretty negative, education pretty negative, utilities was negative for the week, housing negative. So again, it was pretty, bloody week, bear market week. Metals and mining was actually negative for the week. So yeah, pretty much everything was negative for the week. See if we find any green. Semiconductors was a little bit mixed. Natural gas utilities was split. Electric utilities kind of split, so not a whole lot of green for the week. Somebody poked the bear, and we got a lot of red. We'll see where it's pointing right now. Probably down, Dow down, yes. S&P SPXU is a short. That's a bear. SPXS is a bear, so pointing down. UVXY, that's the long on the VIX, leverage long on the VIX, so up on volatility. VXX is another long on volatility. Small cap bear, so SRTY is another bear on the Russell. So, everything's pointing down right now. So again, somebody poked the bear, and we're headed in, at least in the near term, into a bear market. So industries, communication was actually green. That's like the worst performer of the year. And so, again, they're taking, the worst performer and putting some money in. Technology, same way. I wouldn't, again, personal opinion, I wouldn't expect those to hold. Those are short term, attempts to run the underperformer. I don't think those will hold up very well. So natural gas up, carbon offsets up. Yeah, we saw that last week. A lot of carbon. Seems to be a lot of interest in these carbon ETFs lately. Look at the treasuries, the bonds. So 3 to 7, 7 to 10. Asia. So the shorter term bonds are gaining more interest, and British pound recovered, etc., etc. So the euro is down. Okay, let's look at the futures. And we'll talk strategies, and I can try to answer any questions you have when we get there as well. See, you guys are answering each other's questions again. That's great, great group we've got. Welcome, John. John wants to look at Amazon. Don't let me forget. Alan Krantz asks why did I poke the bear? I didn't poke the bear, Alan, but somebody sure did, didn't they? Yeah, now in a minute I'll talk about what I think potentially may have poked that bear. And then PETA X says DXY looks like it might try to bottom soon. Yeah, we'll talk about again the potential impact of the Fed's decision on the dollar, on yields, bond yields, etc. Okay, so here's the futures in FinBiz. You can see, pretty much everybody rolled over. Got a red candle, red candles all along. Morning star on the NASDAQ. So again, everything's pointing down. European stock markets dipping. Germans bouncing up a little bit. See the bounce up in the VIX. Again, it's sitting around 23 on the futures. Let me see what it's showing in. Right now, the VIX is showing at 2283 in Thinkorswim. Um, PETA at mentioned DXY. I don't see it's not NA right now. We'll see what the future says. So we see oil took a dip, bounced off of 70, pretty stable now. Again, tomorrow we'll talk about a little bit about our strategy in oil, but if you remember a couple weeks ago, Biden said he was going to start refilling the SPR, the Strategic Petroleum Reserves, at about 75. So I expect that to provide some level of support to oil. Again, I expect they'll start refilling the SPR because it had been depleted to historic lows. And so there should be some support around the 70 to 75 range in oil. Again, that would be my expectation. And again, tomorrow we'll talk about one of the plays that we've taken in those regards in oil. We see oil or gold bounced up. It's got good support above 1800, so it looks like it's in a nice uptrend. Same thing with silver. Silver's running up. While I'm here, we'll talk about this a little bit probably tomorrow as well. But you can see, you can click on any of these charts in the futures and open that chart in another link because it looks like, silver's like at an all-time high, and you might go, hey, I want to short silver there. And I looked at that, but then if you zoom out a bit, you see, okay, silver's at 23, but its high for the year is as high as 28. And if we zoom out further, you can see it goes, much higher, 30, etc. So silver's not really at an extreme high yet. So again, I'm not looking at shorting silver right now. We'll look at the ETFs. I think it's ZSL is the ETF to short silver, and that's what I was looking at. Is when I see one of those charts at an extreme, I want to see, hey, is that a signal to short? And again, silver's got some room to run, and I would expect it to keep running. Potentially up to that 28.30 dollar level. Gold could easily go to 2,000. Again, when you see risk off here and also what's going on with crypto, I think you will see more money flow into precious metals. So copper's running up a bit on China reopening, although there's recessionary pressures on, your industrial metals. The other commodities are crazy. We've got soybean oil down, soybean meal way up. It's pretty crazy. And again, tomorrow we'll look at if there's any ETFs that we can play to take advantage of these. Now, if you want to look for individual stocks in these areas, again, I would recommend, right-clicking, looking and zooming out on these charts to see if they're truly extremes or, if they're in the middle of a longer-term trend. So here's the treasuries. We could see they had the prices had been running up, the yields had been going down, and then now with the fear of a more hawkish Fed, then the yields started perking back up and driving the prices down. And we've been saying, for quite a while. I haven't seen Tanvir here this morning. If you're here, Tanvir, raise your hand. I know he's a TLT fan, and we've been talking about bonds for a while. Again, with rising interest rates, the Fed decision this week, I would expect bond yields to have to increase, which would drive bond prices down, right? Because the bonds need to compete with the Fed interest rate hikes, and if they're going to go somewhere between 5 and 6%, the bond yields have to at least be in that ballpark. So again, I'd expect a decrease in bond prices. So these guys are likely to come down. We saw the yield curve was pretty severely inverted, which again is a prediction of recession, and you'll hear a lot of discussion about that as well. So. PETA, I think, was talking about the Dixie DXY, which is the index on the U.S. dollar. So we saw it had dropped, had been declining, perked up a little bit, and again with rising interest rates. Although it's pretty complex given the global picture. I know the Bank of Canada only raised 50 basis points the past week. So it's a little bit more complex. Yeah, the dollar should eventually weaken, but we might get a perk in the rising interest rates on the Fed decision. So, oh, there's Tanvir. Good. Just in time for bonds. So glad to see you. Thank you for joining us. So hopefully you heard my discussion of what I think, in terms of bond yields, bond prices this week. Again, I think, whatever the Fed decision is, the increase in interest rates, I think it's going to cause bond yields to have to at least perk up some, which is going to drive the prices down some. And then we'll see what the longer term trend is after that. But bond prices had been recovering quite a bit. So. Okay. Let me jump into strategies. I haven't forgot. Somebody asked about Amazon. I'm trying to remember to cover that. I'll get to that in the Q&A. In fact, I'll put that in there right now to remember to go back to FinBiz, and we'll look at Amazon. So what poked the bear? What poked the bear market? And I guess I'll do my bear thing. So that's the Kramer soundboard, and you can find that in the link section on our homepage as well. It's one of the tools or resources, etc. You can also find the invite to our Discord, all our social media, all these tools like the options calendar, the market holiday calendar, etc. All these on our homepage, beachbumtrading.com, bum without the U. So again, a quick reference to all these links. So, what poked the bear market? Well, one of the things that might have poked the bear market is a delayed response to the better than expected employment data we got last week. We got some employment numbers. It was expected that the employment market might be weakening, and therefore the Fed might fear, higher unemployment. Therefore, it might be more dovish. That didn't happen, and so but it didn't. The market didn't react last week to that data, but it might have been a delayed response because starting on Monday, you already saw elevated volatility, elevated VIX, and the market started to decline. Um, Another thing, is we got this hotter than expected PPI data on Friday, and we saw a pretty red day on Friday. So, again, higher inflation. So the Fed's going to have to be more hawkish to kill inflation, and that again may have contributed to the severe dump in the markets, particularly on Friday. So another area that might have caused the start of this, who poked the bear, what poked the bear this week, is it could have been the start of what's called tax loss selling or tax loss harvesting. And again, just a reminder, we've got videos coming out that will explain in more detail what that means. Is this was the first week within the wash sale rule 30-day window. Is The first day this week was December 5th. If you look at the market holiday calendar for 2023, you'll see that January 2nd is a market holiday. And therefore, this was really the first week within that 30-day window where with what the wash sale is if I sell something for a tax loss, right now I cannot buy that back within 30 days or I lose the benefit of that tax deduction due to the loss in that selling that particular stock. So we may have seen a start of that kind of tax loss harvesting, tax loss selling in this first week within that 30-day window. And thank you very much, Spacula, for that super chat. Also, Ollie in the Bay, thank you very much. In Beach We Trust. Thank you, Ollie. We greatly appreciate all your support. Thank you for those super chats. Thank you for all you guys do to support us. We certainly greatly appreciate it. So thank you again. So again, we're going to see more of that tax loss harvesting, tax loss selling all through the month of December, and we're going to talk about it in more detail. What does that mean? When do we see the most impact? When do we see it abating? But that's going to put selling pressure on particularly stocks that are down, significantly. And tomorrow I'll probably talk about this again in terms of stocks you're looking at buying. Is you need to be aware of this. Stocks that are down significantly are candidates for tax loss harvesting, and that will put further downward pressure on those stocks. So again, we'll talk about that more tomorrow, but I think that also may have contributed to poking the bear this week is the start of that tax loss harvesting within this 30-day window. So again, keep an eye out, keep a reminder, subscribe to our channel, hit the bell notify icon, and you'll get notified when we come out with these videos that will explain in more detail what exactly is tax loss harvesting, how does it work, how might you take advantage of it if you can, and then also how do you avoid a wash sale, which can negate the benefits of tax loss harvesting if you're not careful and you don't do this in the appropriate fashion. So also, just a reminder, please see our video about how to make money trading in December. It has more general strategies, trends, trading ideas about how to make money trading in December in general. And again, the rest of this month, we'll be talking about tax loss harvesting, the wash sale, and then we'll get into, the Santa rally theme towards the end of the month. And then we'll see, can we expect a Santa Claus rally this year? Why or why not? What exactly does that mean? And again, we'll have a more detailed video coming out about what is a Santa Claus rally? What does that mean? When does it occur, etc. And what can we expect coming out of that? So that's those are the only things I could think of that what poked the bear market this week is some of this data. It also could have been just fear of the interest rate decision, the CPI coming out. Risk off ahead of these decisions, minimize the risk, and regardless of what that decision may be. It is going to cause volatility. So Tuesday, Wednesday, we can expect increased volatility. We could potentially expect some kind of whiplash, whipsaw reactions. Right when they issue the decision, the Fed interest rate decision, you're going to see an algo reaction, an initial market reaction. Then, as they absorb that data, you might see it whipsaw in the other direction, or just a elastic reaction to the initial reaction. But also, once Powell comes out, you'll see market reactions to something he says. The market will react violently, potentially, if they don't like what he says. We saw that at the last when we saw Pumping Powell come out at his last speech. The market liked what he said, and it tried to exuberantly run, and then now it's reacting in the opposite direction. So. Okay, let me grab a drink a sec and I'll take questions. I'll see if I missed any questions. I do know I'll jump over and we'll look at Amazon, just a high level look at Amazon. I can't remember who asked for that offhand, but I know someone asked. So we'll take a look at Amazon. If there's other ones you want us to quickly take a look at, I've got a few minutes. I can take a look at a few. Okay, so somebody wants to look at Square Block. I'll look at that too. Just Tony Roses, just an FYI. In terms of due diligence on Squares, we do have a due diligence video I did a while back on Square Block. I would highly recommend you take a look at that. It'll give you a longer term view of what we think of Square and Block in terms of an investment, any kind of longer term hold. But I'll take a look at the chart. So here's Amazon. You can see it's been decline. Also, just a reminder is please come back tomorrow for our watch list picks. I'm going to talk about selling cash secured puts on Amazon, probably a little bit, and I've got a video coming out also that has to do with my analysis of selling cash secured puts or selling puts against Amazon. So again, I've taken a look at this. You can see it's in decline. If we zoom out a little bit, see, okay, the weekly's been in decline since December of last year, pretty much. So pretty much all this year, it's been in significant decline. And if we zoom out even more, it looks pretty ugly, pretty steep decline. I could tell you the next support level I was looking at in terms of like cash secured puts, I think was this guy here is 81.30. So I was looking at potentially selling a put down to 81.30 because again, I want to get at least a 2-to-1 risk to reward ratio, and it doesn't look too good in terms of any kind of shorter term support. There just really isn't anything. You see its 52-week low is 85, so, and it's breaking down to that. So again, from what I could see looking at these charts, anywhere down to this 81 level, and then the next one is down at a 65 level. And you can see it's broken all the way down through all its moving averages. So it's on a downward trajectory, and the next support isn't for quite a ways. And that's a hammer. So again, anywhere between 80 and 65 not a lot of support. There's not a lot of catalysts, not a lot of positive catalysts, except maybe the holidays. But again, I don't think online shopping. I think more people are going to do brick and mortar this year just to get out. So that's my short-term view on Amazon. Also, Peta, if that's the person that asked or whoever asked about Amazon, I also have a due diligence video on an Amazon. I've got some experience with people with both using Amazon Web Services, using Amazon Prime. Also, I know somebody that used to work at Amazon, so I've got a little bit of an inside view on them. And you can hear some of my other thoughts on Amazon from a kind of internal view and a customer view in that due diligence video as well. So if we look at Square, okay, so it looks like it's in a descending wedge. We've got a multiple bottom at around what, 55. We see they're losing a ton of money, and they're in financial and they're in crypto. So, from again, you can listen to my due diligence video, but those three things I wouldn't touch Square myself. In terms of any kind of long-term hold, long-term swing, you could see it's getting rejected off this descending trend line. So I would expect it to reject. It's kind of holding that multiple bottom. We zoom out a little bit, so that's pretty good support in that 50 area. So any kind of shorter term swings, if you want to, if it holds support at 50, you could ride it up to 75. It's a pretty good risk reward for a very short term swing. I just wouldn't hold it any longer than that. So, good morning, Born to Be Free. Glad to see you. Thank you for joining us. So if I missed any other questions, please throw them up quick. I could take a couple more. I'm sorry, Born to Be Free. We're wrapping up pretty soon, but please rewind and listen to the rest of the video. Okay, does anybody else have any immediate questions? If not, you can always post questions to us in our free Discord. Again, our Discord's free to join. You can find an invite in the description box below. Also on our homepage in the links section. Our homepage is beachbumtrading.com. Bum without the U. There's links to all our social media. We have a Facebook group. You can contact us there via any of our social media and our Discord. And you can also put additional questions in the comments below this video, and we'll try to respond to any of your questions as soon as we're able. Tanvir says his due diligence on Square says price is going to 35. So, and again, you can see, my detailed video on Square Block and other views on their future in that due diligence video as well. So, okay, if anybody has any further questions, again, hit us up in the Discord, Facebook group, in the comments, via social media. If there's anything you want us to look at in part 2 tomorrow, come back, same bat time, same bat channel, 10 a.m. Eastern time, and we'll use all this market analysis, all these strategies, etc., and we'll pick our stocks to put on our swing trading watch list for next week, and we'll also talk about other trade ideas, trading techniques, etc. We're going to be talking about more about some of our option strategies as well, and the evolution of our option strategies and some things we're looking at, and in particular how that applies to this upcoming week, December 12th through the 16th, including the Fed interest rate decision. So we'll talk all about all that tomorrow, but if there's any specific questions you want us to address tomorrow, again, post them in our Discord, in the comments, etc. So otherwise, everybody have a great Saturday. Thank you all for joining us. And thank you again, Spacula, Speculation, and Ollie in the Bay for those super chats. We greatly appreciate it. We appreciate all your support. So have a great Saturday. We'll see you all tomorrow morning. Bye.